Yes, people, a very, very happy evening to all of you. Thank you so much. So, guys, we're doing this chapter called as Introduction to Accounting Standards. And what did we discuss in last class, people? About accounting standard. We understood what is the meaning of accounting standard. Then we learned what is the no accounting standard setting process. The setting process of accounting standard we have learned, right? Objective of accounting standard. Recap of that I'll not give today. Why? Because after this session gets over, I'll be doing a quick revision video for the entire chapter. In that revision video, I'll cover the revision of the last class as well. So today I'm directly starting with the next concept, the last concept of this chapter, which is int AS. Int AS. Now about int AS, you will study in depth in CA final. So in CA intermediate, we have a very, very small glimpse about int AS, whereas the in-depth discussion of this is going to happen in your CA final level in the paper called as financial reporting. It's not called as accounting anymore. Accounting in CA final becomes financial reporting, shortly and sweetly called as FR. Now, all of you know that in India, we have two types of accounting standard. One local language, second is international language. The local accounting language is called as accounting standard. Just accounting standard is called the local language. International accounting language is called here as int AS. Int AS. It is nothing but convergence with IFRS. It is convergence with IFRS. So what is the meaning of int AS? It is a set of accounting standard. So int AS is also nothing but accounting standard issued by whom, people? Issued by, again, the same board who issued accounting standard. The same board is issuing int AS also. So it is issued by accounting standard board, shortly and sweetly called as ASB, who is a part of, which is a body of ICAI. And this standard, which has been recommended by ICAI to be applicable on the companies, we have to get a notification done from Ministry of Corporate Affairs, shortly and sweetly called as MCA, to be notified by Ministry of Corporate Affairs. And this notification they will not do unless and until they consult with NFRA. NFRA stands for National Financial Reporting Authority. So this is one independent body, independent of ICI, who is given multiple roles and responsibility. In that, one such responsibility is that they have to give advisory. They have to give advisory to MCA with regard to accounting standards and int AS. And this int AS is converged version. We have not adopted this as it is from IFRS. We have converged with IFRS, which stands for International Financial Reporting Standard, issued by, who's issuing IFRS? Who's issuing IFRS? IASB. Can you tell me the full form of IASB? International Accounting Standard Board. Before IFRS, what did we have? IAS. Before IFRS, what did we have? IAS. IAS was issued by IASC. What is full form of IASC? International Accounting Standard Committee. Fantastic. Any problem here? Any difficulty here? Online people, any difficulty so far? Fantastic. I'll come and discuss this point a bit later. Now the question that comes to your mind is, how did int AS come into existence? What is the historical background about this? Pre-2000 means before 2000. Before 2000, we had something called as only Indian GAAP, where we had only accounting standards, India followed before 2000, I'm talking about before globalization. In 2000, that is before 2000, India followed accounting standard, which was issued by the Institute of Chartered Accountants of India through Accounting Standard Board. All of us know this point. Post 2000, pre means what? Before 2000. Post means what? That is after 2000. Globalization had happened. What is the meaning of globalization? What is the meaning of globalization? Can somebody tell me? What is the meaning of globalization? Okay, ease of trading between two countries. Point taken. Anything else? Integration of national economy with international economy. Okay, point taken. Anything else? In simple layman language, which we can understand. All of us can understand. தெளிவா போட்டிருக்கேன் meaning of globalization. அதால் படிச்சு சொல்லாமல. Now, meaning of globalization. Globalization means the process of increasing integration and interconnection of economies across the world. That's where she has taken the point from. No? Okay, Ratta Mara, very good. In simple words, it's a free flow of goods. Free means not that free. OC level free கிடையாது. Free flow of goods means the movement of goods and services between countries should be very much smooth. We should be able to sell goods from our country to other countries. We should be able to buy goods from other countries very smoothly, very conveniently. That is called as free flow of goods. So we wanted the free flow of goods, services, capital, technology, information across countries. These are called as assets of any countries. Any country who's able to buy goods, sell goods. It's called as import export of goods, import export of services, import export of capital, technology, information. Such country will grow at a very fast pace. So India in early 2000 realized that if this country is not open for globalization, the journey to become a strong economy, a leading economy will always be a dream. So to ensure that we become a leading, to ensure that we are leading, having a leading economy, it's very important that we had to have the globalization in place. Now there's something called as globalization. This is a wider term. In globalization, there's something more specific called as globalization of capital market. One side we're talking about import export of goods, import export of services, technology, information, etc., etc. Beyond that, there's one more objective of globalization of capital markets. What is the meaning of globalization of capital markets? Globalization of capital market means integration of financial market of different countries, allowing capital, that is money, to move freely across borders. In short, countries in early 2000, or let's say in 1990s or 1980s, only a specific top notch companies who has got very good connectivity across the world, who has got very good connectivity with the government, they were able to do import exports very conveniently. If they wanted to raise funds, for them raising the funds was very easy now. But apart from those people, if anybody else wanted to do import export smoothly, if they wanted to raise funds, if they wanted to invest in the international stock markets, we had a backlog there. Now for example, let me tell you, let's say I want to raise funds, I want to raise finance, I want investment from all of you. In order to get investment from all of you, what do I need to give you to make you understand that my business is doing well? What is that thing that you need from me? If I orally give you a commitment that no, this company was started in so and so year, we have so much of customer, so much of products we take care of, so much of services we take care of, we are doing aha, oho, if I tell orally, will you accept and give me that required money? No. Then what is that one document that you require from me to believe in what I say? You want financial statement. Okay. In financial statement, what in particular are you looking into? I will look into profit and loss account to understand what is the turnover of the company. Then I'll try to understand what is the profitability that they're making. And this financial statement, I want from multiple years to see what is the growth. Am I having the upward growth or is it the downward growth? I'll see the growth. I'll look into the position of the balance sheet item. Using these, both balance sheet and P&L, we'll do a lot of ratio analysis to understand actually whether the company is doing good today or not. In future, is the company going to do decent or not? Through various kind of analysis, we'll do it. And this analysis tool, what takes as a base, the financial statement is taken as a base to do multiple analysis. So fund flow analysis, cash flow analysis, for that what is required? Financial statement is required. Imagine if I present you a financial statement, which only I can understand. You as a foreign people, who are you? You are foreign people. Somebody is America, somebody is Australia, somebody is New Zealand, somebody is Canada, somebody is UAE. All of you speak different language. And so am I speaking a different language. So if I present a financial statement to all of you, which is only understood by me, not by you, will you understand anything in that financial statement? No. So therefore, people realized in early 2000 that if they want globalization to happen and globalization of capital market to happen, it is very important that the language what I speak, you understand, or the language what you speak, I understand. Got it, not got it? So it is very important for us to have a common accounting language. Therefore, we thought of adopting IFRS as it is. But the problem in adoption is what you know. The IFRS was formulated keeping into mind certain economic conditions, business conditions, and legal conditions. And those conditions are very different from our business conditions, economic conditions, and legal conditions. So therefore, we could not adopt that as it is. So what strategy we followed? Not adoption strategy. We followed convergence strategy, where 90% of the foreign language we got it, and 10% modification we made here and there, which will suit to best of our economy. Right? That is why it is called as Ind AS as a convergence with IFRS. Now what happens is that after this thing, when I present the financial statement to you, you are able to understand in a better way. This kind of understanding was not there when we were preparing the financial statement based on only AS. Based on AS, the financial statement that I was preparing, you were not able to understand that. You didn't have the confidence on the company. Now that I'm telling you, I have prepared the financial statement on the basis of Ind AS, automatically your confidence is coming on my financial statement. You're able to believe the financial statement. You're able to understand the financial statement. So therefore, we understood that if you want this globalization to happen, if you wanted this globalization of capital market to happen, it is very important that we have a common accounting language. Now, investors from one country can invest in the shares of the other country. Correct? If somebody is sitting in UK, now he reads and understands the financial statement of the companies present in India because it is prepared on the basis of Ind AS, which is presented in the language what he understands. So all the foreign people started investing in shares, bonds, and business of our country. Likewise, even we started. Now that we also understand Ind AS, Ind AS is English language, we also can understand the financial statement of other countries, and we are also investing in other countries. So flow of money became very smooth, right? After Ind AS came into picture. So that was the main aim. So in the post 2000 period, when the globalization was happening, we understood that there is a requirement of a common accounting language. We wanted to have a common accounting language in place, and therefore we had a push from the government that we should also focus on international accounting language. So with globalization of capital market, Indian companies started raising capital from the global investors. Now the problem was inconsistencies in the financial reporting with international peer became a barrier. So in early 2000, why we could not, take the advantage of globalization? Why we could not merge with the capital markets across the countries? Why? Because the financial reporting that we did, financial reporting is nothing but the financial document that you prepared was very inconsistent with that of the requirement made by the international law. So what international accounting standard wanted, we didn't present that. So because of which, those people did not understand what financial reporting we were preparing. So language was a big barrier. Language was a big barrier. I'm talking about post 2000. Then from 2000 till 2006, we made a decision that now we have to come out with some international language of accounting, international language of accounting. So in 2006, the decision was made to converge with IFRS. Decision was made in 2006 to converge with IFRS. So we took almost 6 to 10 years to decide that, okay, now let's adopt the international accounting language. Because in India, anything does not happen that smoothly and fastly. If it is a private matter, no, we show some sense of urgency and we do things very fastly. But when it is, such kind of matters, it does not happen within a day. It takes several years to decide what to do and what not to do. So in 2006, the ICI, in consultation with MCA, announced the intent to converge with IFRS. So they didn't want to adopt it. So what did they decide? We have the intention to converge with IFRS, announce the intent to converge Indian standards with IFRS and not adopt, instead converge and make it suitable. Why did we go for convergence model? So that it can be suitable for our legal and economic environment. So only announcement was made that we also have the intent to adopt the foreign accounting language. We are also going to learn foreign accounting language. Like that, we showed our intent. We made a decision on in the year 2006. But from there, you go next in 2011, the first notification had come where first set of Ind AS. How many Ind AS? 35 Ind AS were notified in Feb 2011. So tell me people, before 2000, what were we following? Local language, which is called as accounting standard. So any financial reporting that were prepared based on the local language accounting standard was not understandable by the outsiders. So this became a barrier, and therefore we could not take investment from those people. So somewhere in 2000, early 2000, we realized that no, if I have to go with globalization, it is important for us to have the international accounting standards in place in local, that is not local language, international language is very important. And therefore we decided, let's go with some international language. And this decision we conveyed when, which year? In 2006, we communicated our intent that yes, now we want to converge our accounting standards with IFRS and not adopt it. And after 2006, in 2011, we came out with 35 Ind AS, which were notified by MCA. But implementation was deferred. What is meaning of deferred? We could not implement it. It got postponed due to certain issues, including tax issues. Tax issue was not the only issue. There were so many other issues that the corporates were facing. And when they complained it, then they were like, okay, let's put this on hold and let's try to sort things out. So this happened in 2011, which means 35 Ind AS were notified by MCA, but we could not implement them because we had some lag in the accounting standard what they had proposed. Country was also not ready. People in our, that is companies in our country were also not ready to adopt this Ind AS because they were very comfortable with accounting standard. Think about it. No, you're also comfortable with something. You're in a comfort zone. Suddenly I remove you from the comfort zone and try to give you some heavy task, do like this, do like that. What will you feel? You will resist it because you're already in comfort zone. See, please understand, for very few people, this accounting standard, Ind AS, IFRS matters. But at everybody else, I'll tell you, to implement this Ind AS, a point came where the CA is charged as good as 10 lakh, 15 lakh rupees. That is, for one financial year, if they were supposed to prepare financial statements அப்படினா அது implement பண்றதுக்கு வந்து the people big fours I'm talking about, they went on charging up to 5 lakh, 8 lakh, 10 lakh, 15 lakh. Now think from company's perspective. If I as a listed company am supposed to apply this Ind AS, by spending this 5 lakh rupees or 10 lakh rupees, what am I going to achieve? What am I going to achieve? I'm not going for any global capitalization of market. I'm doing my business in India, I'm happy. But because of your rules and regulations, I'm a company whose turnover is more than 500 crores. So they said, those companies whose turnover is more than 500 crores, you have to compulsorily follow Ind AS. My turnover is more than 500 crores. I have to follow Ind AS. But why should I follow Ind AS? I'm not going for any globalization of capital market, nor I'm going to invest money in any other countries, nor I'm going to take money from any other countries. So why the hell should I do it? So a lot of people started resisting it. Then what happened? Eventually, all the delay was happening. So at the ground level, companies did not support us. So in 2011, even though 35 accounting standards were notified, we could not implement it. We had a lot of ground level issues. Then came 2014. What happened in 2014? Something happened which is not forgettable. Central government got changed. Correct, no? 2014, we had elections. Prior to 2014, who was ruling? Congress. After 2014, what happened? BJP came into picture. So all of you know that every time central government provides their budget or presents their budget in the month of Feb, on which date? 1st of Feb. So 2014, 1st Feb, the budget was presented by the finance minister under Congress rule. Then when the central government got changed after the elections in 2014, again in the month of July 2014, again the budget has been represented by the selected or elected central government back then, which was BJP. So in July 2014, the Honorable FM of India, late Shri Arun Jaitley sir, in the budget announced the urgency to converge the existing accounting standard with IFRS through Ind AS convergence strategy. They said, if you want the economy of the Indian economy to flourish, to go fast, to accelerate, you cannot be this slow. You cannot take your own time to decide, okay, today I'll do the notification, some problem we have, to solve this problem I'll take several years. That drama will not happen. So they pressurized MCA, they pressurized ICI that get going with the implementation of Ind AS. So they gave a very strict advice was given by the finance minister to the MCA and ICI to get rolling with Ind AS. So in 2015, finally, couple of months down the line, 2016, 2017, 2018, 2019, 2020, 2021, 2022, 2023, 2024, 2025, 2026, 2027, 2028, 2029, 2030, 2031, 2032, 2033, 2034, 2035, 2036, 2037, 2038, 2039, 2040, 2041, 2042, 2043, 2044, 2045, 2046, 2047, 2048, 2049, 2050, 2051, 2052, 2053, 2054, 2055, 2056, 2057, 2058, 2059, 2060, 2061, 2062, 2063, 2064, 2065, 2066, 2067, 2068, 2069, 2070, 2071, 2072, 2073, 2074, 2075, 2076, 2077, 2078, 2079, 2080, 2081, 2082, 2083, 2084, 2085, 2086, 2087, 2088, 2089, 2090, 2091, 2092, 2093, 2094, 2095, 2096, 2097, 2098, 2099, 2000, 2001, 2002, 2003, 2004, a roadmap of implementation was given by ICI and MCA. So pursuant to this, MCA notified companies Indian Accounting Standard Rule 2015. So in this particular place, companies Indian Accounting Standard Rule 2015, they notified that a revised roadmap for the phased implementation of NDS will follow from 1617 onwards. So what they said is that from the financial year 1617 onwards, we will give certain category of people or certain category of companies, not people, certain category of companies who has to compulsory follow NDS. Means you will prepare the financial statement as per AS. Parallelly, you will also prepare the financial statement as per NDS. It is mandatory. You cannot escape from it. Let me give an example. The notification said that all the listed companies whose net worth is more than 500 crores. I'll show here. All the listed companies or those who are in the process of listing either in India or outside India whose net worth is 500 crores or more, 500 crores or more. So if you are a company which is a listed company or you are in the process of getting listed soon, matlab listing processes begin. And if your net worth is net worth, not turnover. Turnover is something that you see in the P&L. Net worth, what do you get? Where do you get the information from? Balance sheet. Net worth ka formula is different here, but in your language, I'll tell you it is shareholders fund for ease of understanding. But actual formula is different. If your net worth is 500 crores or more, it's not more than 500 crores. It is 500 crores or more. For you, it is compulsory to have NDS. This was phase 1. This was phase 1, which started in 1617 onwards. Then phase 2, 1 year down the line, they said that now unlisted companies having net worth of 250 crores or more, 250 crores or more, you have to follow NDS. So what did they do? In the first phase, super big companies are there, no? They were compelled to follow NDS. Then in the second phase, 1 year later, big companies were made to follow NDS. So this is called as phase-wise implementation. Gradually, they try to implement and see what problem actually these people are facing. So that time, the financial reporting as per AS and NDS both went parallelly. Both went parallelly. Got it, not got it? So again, I'm reading this point one more time for your understanding. Pursuant to this means after what was announced by FM in the budget, MCA notified where under Companies Indian Accounting Standard Rule 2015, why notification dated 16 February. So the notification date was 16 Feb 2015. They gave a revised roadmap for phased implementation of NDS from the financial year 1617 onwards for certain class of companies. And in this, who were not included? Banking companies, insurance companies, NBFCs were not included. But later, in the second phase onwards, later NBFC were covered in NDS in the phased manner. NBFCs were covered. But till now, banking companies and insurance companies are not coming under the purview of Ind AS because both of them have their own regulatory authority. Both of them have their own regulatory authority. As per their regulatory authority, they have to prepare the financial statement, not as per ICI, not as per MCA. Got it, not got it? So insurance company prepares financial statement as per the regulations given by IRDA, and banking does the financial statement preparation as per RBI norms. So therefore, they are still not coming under the purview of Ind AS. Got it, not got it? Online people. Got it, not got it? Tell. Offline, you tell. Tell offline. Got it, not got it? Tell, got it. Tell, got it. Now, this Ind AS, what we came out with, what is the intention behind it? It was designed to ensure that we have transparency. Means what? The foreign people felt that if you prepare the financial statement or financial reporting as per our language, as per what we want, then only we feel that the financial statement is transparent. Transparency is important, no? The financial statement that you prepare, in that if there is a lot of hidden agenda, if there are a lot of hidden information, for example, there's a particular company who met with a fire accident. Because of that accident, 10 crore worth of goods got destroyed. So that information is not showed anywhere in the financial statement. Is this transparent financial statement or non-transparent? Non-transparent. So if any company is not transparent in the financial statement, as an investor, will you like to invest in that company? The answer is no. So they felt that if you are preparing the financial statement as per Ind AS, we believe that this financial statement are transparent. Financial statement are transparent. Second, if you follow this Ind-AS every year, as per what we say, we feel that the financial statements are prepared on consistent basis every year. So anything which is done consistently, will induce confidence among the stakeholders. Today you do something, tomorrow you change and do something else, day after tomorrow you do something else, like that. Mati paste now, confidence paid down, which means you're not consistent. So to have a trust on somebody, whatever you follow, if you follow consistently, the trust is maintained. We wanted the financial statement to be comparable. Means what? If I prepare the financial statement as per AS, can I compare with that of IFRS? No, because both were two extreme end of languages. One is local languages, one is foreign languages. So they said that at least you prepare a financial statement, at least 90% of your financial statement we should be able to understand. So now when the financial statement is prepared as per Ind AS, the person who's got IFRS knowledge is able to interpret and understand this financial statement prepared as per Ind AS. So he was able to compare the financial statement of one company to another company, from one industry of another industry. Therefore, he was able to make a decision whether to invest in that company or not. This financial statement, what you prepared as per Ind AS, became globally relevant. Relevant means what? I was able to understand what you are preparing. So it was relevant to my decision. Are you able to understand what is global relevance? If I give you any information, for example, in CA classes, if I teach you CA content, that is relevant to you. If I sit and teach you physics, chemistry, is it relevant to you? No. So therefore, in the financial statement, if you're presenting the data as per Ind AS, you present relevant data, which I want. So for me to invest in your company, I want 5 important information. If that is there, Apnina, then your financial statement is relevant to me. I can decide whether to invest in your company or not, depending on those relevant points. Therefore, next step is this Ind AS not only did all of these things, further they had enhanced disclosure. Means apart from preparing P&L and balance sheet, they emphasized a lot on detailed disclosures. There were certain informations which were elaborately explained in the notes to accounts. Explanatory notes were given, additional information were given, based on which I was able to decide. See, what happens is, sometimes in a company, the certain decision making is done, which is going to have a future impact. But since it is not a transaction, it will not get captured in the books of accounts. If it is not getting captured in books of accounts, it will not be a part of your financial reporting. Anna, in that year, some important decision making is done, which will have a future impact. So India said that this information is relevant for the user, so better disclose it in form of notes to accounts. Theoretically, disclose pannunga. So this information will give the clarity to the investor whether he should invest in this company or not. So if there is any relevant information which can affect the future decision making, that also you have to disclose now. Like that, the emphasis was given by Ind AS. So therefore, the disclosure was made very much in depth. Enhanced disclosure was given. Therefore, the financial reporting by the Indian companies was considered as a top-notch presentation of the financial reporting. Got it, not got it? Okay, not okay. If it's boring, I'll cut this off and go to the next chapter. I have no problem. I'm telling you, this much of in-depth discussion is required to understand, because you'll get 2 to 4 mark question maximum, not more than that. That too, this will be touched based on MCQ only. Descriptive question will not come. And that too, I'm telling you, this 2 to 4 mark question does not come every attempt. This question from this chapter will come in once in a blue moon. Vanda, 2, 4 mark, 2 mark, 4 mark, directly it'll hit. Right? So if I don't go this deep, gone. If you want me to cut short, I can cut short also, I have no problem. I'll save my energy also. I'll cut short. No? Pakka, you'll answer then. I want full confidence on your face. Full response should be there. Now, convergence with IFRS leads to following. First is global comparability. Very fast I'll do it. Global comparability means what? Investors now can compare Indian companies with the global counterpart. Let's say Kalpabridge Academy, KVA, CA coaching center in India. There's one more academy in Dubai. Let's say FFLA. FFLA is a company incorporated in Dubai. Dubai is a different country and India is a different country. So now the investor can compare these both financial statements and understand in which company I can invest. So comparison was better because both of them prepared the financial statement with almost same common language, which is not AS, which is Ind AS. So this is Ind AS, maybe this is IFRS. I don't know what they follow in Dubai, but I'm just telling you for example purpose. This help to improve inter-unit, inter-firm, and inter-industry comparison. What is inter-unit comparison? Within the company, you have multiple branches, multiple companies within the group companies that you were able to compare. You were able to compare one company of yours with other company of others. You were able to compare with one industry to another industry. Industry-wise comparison means what? Gold industry was able to compare with silver industry. Example I'm telling. One industry. So manufacturing industry we could compare with service industry. So this led to comparison very easily. That is, I was able to compare one data, that is manufacturing industry prepared the FR based on Ind AS. Service industry also prepared the financial reporting based on Ind AS. Now I was able to compare. We had a common base of measurement. Hence, we had a global comparability. Our country's manufacturing sector was compared with that of Dubai, China, other countries ka manufacturing, what you call industry, to see which manufacturing industry is growing, who has got a better potential to expand in future. So that way was paved by adopting Ind AS. So that led to global comparability. Transparency disclosure, same point again and again is getting repeated. IFRS converged Ind AS provided more detailed and transparent disclosure, thereby gaining confidence of investors across the globe. Should I explain this point in depth again? Not required. Understood. Okay. Easier access to global capital. International investors demand IFRS. Either you prepare financial reporting as per IFRS. Illana, at least you give financial statement which is prepared on basis of IFRS converged Ind AS. Which means the financial reporting should be based on some international language which we can understand. Don't give financial statement what you know, what you understand. Give that financial statement what we want, what we understand. If we understand your company well, if we are able to read your company well, then if we see any potential in your company, we will invest money in your company. So international investors demand IFRS converged Ind AS compliant financials as a primary condition to invest in Indian companies. So since 2000 to 2015, we could not go for foreign direct investments. We couldn't get huge investments from these countries because till 2015, we never had international accounting language in place. We were preparing the financial statement with local language, which the foreign people did not understand. Therefore, the opportunity of raising funds from them, we were deprived of. That's why after the government got changed in 2014, major pressure was created by them on MCA and ICA that no, you have to train all this corporate people to be compliant with Ind AS. Only then we can get a lot of foreign direct investments. So this convergence opened door for raising global capital. Not just that, we also had the chance of global listing. Means what? Enabling the Indian companies. This enabled the Indian companies to list their company shares in the foreign stock exchange, attracting the foreign investors. So our country companies, they started investing the stocks in the foreign stock exchange, like New York Stock Exchange, like the different foreign stock exchanges, we could list our shares. Indian company shares were listed in the foreign stock exchange. This gave potential for their shareholders to earn money. Correct? No? Why do people invest in stock market? Or let's say if you are investing in stock market, what is the motive behind you investing in stock market? Please tell me. You want to make profit in simple language, layman language, not capital gain. That is hi-fi language. In simple language, your motto is what? To earn extra profit, to earn money from alternative source. You are creating an alternative source of your income. Likewise, this adoption of Ind AS, where the financial reporting was done based on Ind AS, you were able to, go to the foreign share markets, foreign stock markets and list that stock in their stock market. So investors of their country were able to make money out of your stocks that were listed in the foreign stock exchange. Next, group consolidation. Now, what does this mean? Consolidation is a chapter that we'll study separately. In our course, it is very much applicable. It's a process where, let's say I have two companies. One is CA.Prathik Academy Limited, and there is another company by name FFLA Limited. Both are two different companies. And CA.Prathik Academy has invested 60% in the FFLA. Means what? Out of 100% capital, 60% capital is contributed by KVA and 40% has been contributed by others, by other people. Got it? Not got it? By this virtue, KVA will be called as holding company, and FFL is called as subsidiary company. So when any company is investing more than 50% in the capital of other company, then this company who's investing is called as holding company, and the company which is receiving investment is called as subsidiary company. So whenever there is a relation of holding and subsidiary in or between any company, it is compulsory as per our accounting standards or Ind AS to go ahead with consolidation. Means what? CA.Prathik Academy in its personal capacity will prepare the financial statement for KVA. Likewise, FFL will have a separate financial reporting for FFL, right? Separately we'll have it. But I am common shareholder of both. The owner, has invested in KVA. I have invested in KVA, and my company is invested 60% in FFLA. So can I say both are my companies? So I want to know combiningly what is my performance. So turnover of KVA and turnover of FFLA, I merge together and tell this is the total turnover of my group company. This process of merging the financial statement and making one single financial statement is called as consolidation. Got it, not got it? I try to put in very simple language because this is not consolidation class. I try to put in very simple language. But when I come to consolidation, we'll discuss more technically, more depth. Merging of the financial statement of an international parent company. So imagine this KVA is not a company in India. Imagine this is a company which is based in UK. So KVA is present in UK. FFLA is in India. So holding company is in UK and subsidiary companies there were in India. Now both of this have to merge up. Both have this financial statement. If I have to consolidate means the document, the underlying should be same. Imagine KVA is preparing financial statement as per IFRS. FFLA is preparing financial statement as per accounting standards. If I try to merge both, will it make sense? No, because accounting standard, we have different way of accounting, which is not matching with IFRS. IFRS is doing things in different way. Accounting standard is doing things in different way. Accounting is not matching. In that case, the underlying basis of both financial statement that is being prepared is different. Can I merge? You tell me, people. If I tell you $1,000 plus 11,000 rupees is equal to total 12,000 rupees. Is it correct? No. Why? Because this 1,000 rupees ka underlying is what? Dollars. And this 1,000 rupees ka underlying is what? Rupees. They're not having a common unit of measurement. Therefore, I have to convert either dollar into rupees or rupees into dollar and make one common unit of measurement to merge. So therefore, when we went with Ind AS, this was almost similar to IFRS. So IFRS based KVA's financial statement and Ind AS based FFL's financial statement. Now we could merge. But this kind of merging could not happen when KVA was preparing on IFRS basis and FFL was preparing on AS basis. So that was not being merged because the unit of measurement was different. So merging the financial statement of an international parent company with those of its Indian subsidiary is known as consolidation, and convergence with IFRS helps to ensure that this is done smoothly and consistently. So group consolidation of companies across the globe for the same group of companies was made very comfortable because of implementation of Ind AS. Okay, not okay. Now comes a very important point. There's something called as carve in and carve out. In this chapter, if ICA really wants to check the concept, this will be one of the major important places where they'll check the concept. There's something called as carve in. There's something called as carve out. Government of India, in consultation with ICI, decided to converge with IFRS, not to adopt as it is. As is means what? We didn't adopt the IFRS as it is. Rather, we decided to converge. So, while India is substantially aligned with IAS or IFRS, there are modifications made to suit India's legal, economical, and regulatory environment. So, what are they trying to say is that when the IFRS was prepared, it was as per international or let's say multiple countries' economic, legal, and regulatory environment. We could not adopt it as it is because our country's economic, legal, and regulatory environment was different. So we could not take as it is. So what we did is, from IFRS, let's say 90% of things we adopted as it is. But remaining 10% is there. No, we did modification. In this 10%, what happened is, some part of it we discontinued. If IFRS said do like this, we said no, we'll not do like this, we'll do it in this manner. Correct? So we deviated from what IFRS said. So any deviations made from IFRS is termed as carve out. Carve out. And we said that in our country, we will do this in this way. So we brought new rules into Ind-AS. That is called as carve in very simple language. I'll explain this elaborately. So this 10% changes what we made. No, this 10% changes was two type of changes. One, certain things we removed from Ind-AS. Certain things we removed from Ind-AS, and certain new things were brought inside Ind-AS. So that is termed as carve in and carve out, which I'll discuss in some time. Now there were three types of modifications. There were three types of changes made. First is called as terminology difference. I'm talking about the difference between Ind-AS and IFRS. First difference is terminology difference. Means what? As per Ind-AS, we will call it as statement of P&L, shortly and sweetly as SPL. But the same thing in the IFRS, they said we will call it as statement of comprehensive income. So in IFRS, the P&L was named as statement of comprehensive income. If this name we give to Indian people, they'll feel like, oh, what Ind-AS you're giving, they'll be next level harassed. They will like, our people are used to this word called as profit and loss account. In that statement of P&L, the word P&L is not there, apnina, we will not get proper sleep. So they said that statement of comprehensive income, we will not keep it, rather we'll change it to statement of P&L. We used to call balance sheet as balance sheet because that is how we are used to. That is how our brain is trained with. They used to call this as statement of financial position. You tell me, people, touch your heart and tell me, balance sheet name looks better or statement of financial position name looks better? Balance sheet looks better because last so many years, continuously balance sheet, every day you're talking about it. So you're in comfort zone. So we didn't want to unnecessarily go and touch all these things. So we felt that there's certain terminology which our people are used to know. Let's retain the originality as it is. Let's not change it. These kind of changes are called as terminology difference. These kind of changes are called as terminology difference. Any problem? Any problem? No problem. Then what happened, See, both IFRS and Ind-AS are principle based. Means what? They give wider options for us to do accounting in multiple ways. They give more flexibility. If you want to do accounting this way, do it this way. Or that way, do it that way. Or another way means another way. So IFRS gave multiple options. AS has got very, very limited options. Too much restriction also is bad. Too much being liberal also is bad. So Ind-AS said that we can't be too much like IFRS also, and we can't be too much like AS also. We have to come out with some middle part, right? So now what happened is, we started removing multiple options provided under IFRS, where under accounting Ind-AS, we started curbing the multiple options given by IFRS. So IFRS allowed companies flexibility where they can choose between different methods for accounting a transaction. If a transaction can be accounted in multiple ways, they gave 4 ways. Ind-AS said that for these people, giving 4 options is too much. So what they said is, we'll curb the option, give only 2 options. Give only 2 options. But under Ind-AS, this choice was removed to promote uniformity, to ensure there's a uniformity and reduce subjectivity in the financial reporting in India. It was important that we have little bit limited options. Now, what is the meaning of subjectivity? Subjectivity means an independence given to you to choose whatever methods you want to choose. For example, I'm telling, depreciation can be calculated in multiple ways. Straight line method, WDV method, production unit method, Machina rate method, depletion method, sum of years digit method. I'm just taking this as an example. Don't take in true sense. I'm just trying to put something in your head. 6 options are there. How many options? 6 options. IFRS is telling that you take any of the 6 options, I'm okay with it. It's not truly happening. I'm just telling you for the sake of making you understand something. So IFRS, imagine here, gave 6 options. Ind-AS said that if I give 6 options, everybody will start, coming out with the financial statement or depreciation in different methods. So for me, comparability will become difficult. I'll not be able to ensure uniformity because each one will take depreciation method what they feel like. It is subject to their thinking, subject to what they feel like. So let's not leave the decision to their subjectivity. Let's compel them to follow limited options. So we removed the 4 options and kept 2 options as SLM and WDV. Now the question is, if the multiple options provided by IFRS, if it is removed by Ind AS, does that lead to carve out? The answer is no. However, these kind of modification, that is curbing the option, curtailing of the option, will not result into carve out. So what is meaning of carve in and carve out? I'll discuss right now. But we are telling that removal of multiple options given by IFRS does not lead to carve out. If MCQ question has to be asked, this is one nice place where the MCQ can be developed. Example of this, sir. In IFRS, multiple option may be allowed. That is, you can either go with cost model or revaluation model. Let's say in property, plant, equipment, accounting for fixed assets, there are two model of valuation. One is cost model, second is revaluation model in IFRS. In DS, what did we say? No, don't give two options, just give one option to them. If three options are given, then they tell don't give three options, just give two options. So options were little limited in DS. So in DS, one option may be removed, only one method is allowed. This is one example. If there are 6 options, 4 removed, 2 allowed. Or if 6 options are there, 3 removed, 3 allowed. It can be in any combination. So what Ind AS is decided, we have to go with that. So here, are we trying to change the principle? Are we trying to change the rule here? No. We are telling that since you give multiple options, we are just limiting the options. Does it mean that we are removing the principle? No. Are we changing the rule? No. So no principle is removed. Only choices are restricted. Therefore, it does not change the fundamental requirement of IFRS. Rather, improves comparability and consistency. If 6 options are given, every year people will change one options. So comparability will not be there. Consistency will not be there. So instead, if you give one option or 2 options, you can ensure that the comparability and consistency is there. Got it, not got it. This is the second change. Third is changes made because of different economic environments. So if any changes that is being made in India is because of economic environment, that is called as carve in and carve out. What is carve out? Removing or modifying a requirement of IFRS in NDS. An option is completely removed or a major change is done in the principal level. That is called as carve out. What is carve in? Adding a requirement in NDS which was not there in IFRS. In IFRS, this point was not there. So while preparing NDS, we took 90%. Imagine this is IFRS. What is this? Ind AS. From IFRS, how much content we copy pasted as it is? 90%. Some point was not present. So what did we do is from outside means what? Looking into India's economic conditions, regulatory conditions, legal conditions, we put 5% data in this. How much percent data? 5% data. New points is brought inside. This is called as carve in. Adding a requirement into Ind AS which was not present in IFRS is called as carve in. What is carve out? There was something suggested by IFRS. We said, no, we will not follow that because it does not suit to our country's conditions, requirement. So we will do as per our requirement. So we completely changed it, modified it, removed it. That is called as carve out. இது பத்தலையா நான் கீழ மீனிங் கொடுத்திருக்கேன். Carve out meaning. When India does not adopt a particular IFRS accounting principle and policy. Look at the language. The principle or policy that is being suggested by IFRS that we are changing. That is called as carve out. Whereas if you come to point number 2, what is point number 2? Removal of multiple option. Is removal of multiple option trying to change the principle or policy? No. It is going to restrict the principle, restrict the policy. We are not changing the policy. So if any policy itself is changed, any principle is changed, that is called as carve out. So when India does not adopt a particular IFRS ka accounting principle or policy by way of removing it or departing from it, departure of it, in India's considering the economic, why do we do this? Considering the economic environment of the country, considering our economic environment, if we deviate from it, this is called as carve out. Why do we do this? Because whatever is suggested in the IFRS that was in conflict with Indian laws, means that principle and that policy which is stated in IFRS was against Companies Act or SEBI. Companies Act only solludu. IFRS something else it is telling. So can we have two conflicting principles or laws in one country? Not possible. We have to ensure that the accounting principles do not override the laws. So therefore, to sync with law, we made necessary changes in IFRS. So we removed certain points in IFRS. We removed principles and policies in IFRS. That process is called as carve out. Second reason, why did we opt for carve out? Because we had practical challenges to implement that in the Indian companies. There are certain things suggested by IFRS which was not practical for Indian companies to implement it. So therefore, for suiting their convenience, we have opted for carving out. We opted to change the options completely. The principle and policy itself was changed. Next, economic reality and business practice in India did not match the requirements stated on the IFRS. Hence, we decided to deviate. What is the meaning of carve-in? Additional guidance or additional requirement given in Ind AS which were not present in IFRS, that were not present in IFRS termed as carve-in. Why did we include that? Because our Schedule 3 said that prepare the financial statement in this manner. To support that, we felt that this point also should be captured in the Ind AS. To align with the Indian legal framework, such as Schedule 3 or any other framework, we felt that these points should be incorporated in Ind AS. Or if we felt that if this point if I add in the Ind AS, transparency will be ensured, consistency will be ensured, more understandability will be ensured. Adukaga they brought in some new policies and new principles which were not existing in the IFRS. Such thing is called as carve-in. The differences caused between Ind AS and IFRS as per point 1 and point 2. What is point 1? TD, terminology differences. What is point 2? Removal of options. As mentioned above, does not lead to carve out, because in terminology difference and removal of options, we are not deviating from the principle or policy. So it is not carve out. It's not carve in. When does carve in and carve out come into picture? When we are deviating from the IFRS ka principle or from IFRS ka policy, then we say it is a carve in and carve out. Got it, not got it. This difference is very, very important, people. A lot of people get confused at this stage. People don't understand what is the true meaning of carve in and carve out. So with this, we're done with this chapter, which is Introduction to Accounting Standard, right? So I will sign off this video. We'll take a break. We'll start a fresh video where I call this as revision series. So maybe in 45 minutes to maximum 1 hour, the entire chapter will be discussed along with the MCQs given in your ICA module plus the own MCQs that I have prepared. Put together, we'll do a complete discussion. Now, 1 month, 2 months or 3 months before the exam, definitely nobody will have the patience to sit and watch the regular classes. So what I thought was, at the end of all the chapters, we'll come out with some revision video, quick revision video, where we can, discuss the concepts in a very faster manner, MCQs in very faster manner, and maybe here and there few sums in very faster manner. So that will help you to regain all the concepts before the exams. Am I loud and clear? So guys, online people, are you clear with what I'm trying to say?
Yes, sir.
Fantastic. So on that positive note, let's sum up with this chapter, people. I'll see you all in the next new session after the break. Until then, bye-bye. See you. Take care.